Hi, everyone. Bill, Wendy, and Jonathan here. We're going to talk about rich dad, poor dad. Who's your daddy? Right after this. Once again, greetings. Thank you so much for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management lenders in the Southeast for real estate professionals. If you would like us to take a look at one of your projects, please go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, go to the Accredited Investor tab.
And send us some money.
That's right. Don't forget to like, share, most importantly, subscribe, and then you can hit a bell too if there's one available. Wednesdays with Wendy, of course. It's so unlike me to be so busy talking, I forget about the graphics.
Yeah.
Anyway, Wednesday with Wendy is a volunteer thing that Wendy does to donate her time to anybody who wants to talk about real estate. She gives everyone 30 minutes, but get on the list, her calendar. She's booked out all the time.
Not all the time.
Oh, there's times available.
Yeah.
Get it while it's hot.
Yeah, that's right.
Yeah.
Am I leaving anything out? Quest Expo.
Yeah, that's coming up.
I don't think there's a graphic for that.
Yes. It's coming up soon. Anyway, it is a great opportunity to meet like-minded people. You can get a 30% discount by using Fairman30, and it's September the 23rd through the 25th. I highly recommend it.
Great networking opportunity.
Absolutely.
Mhm.
Great opportunity to learn about all the different opportunities to invest your money.
Yep.
Right?
Absolutely.
There's a lot
Good
of them.
stuff.
So do we have a question of the week, by the way?
Yeah. So the question of the week, and we'll follow it up later in the show as well. But in your opinion, what is the difference between being rich and being wealthy?
Mm.
And kind of a caveat off of that is, what are some strategies that you employ to build wealth?
Mm-hmm.
Now, we'd love to talk about those next week. So anyone that puts it in the comments, we will be discussing it.
And we'll actually be talking about that over the next few weeks. So we've got a lot of great speakers and topics lined up to where we're really addressing building wealth versus getting rich, because there's a big difference in the two.
Very big.
And Rich Dad, Poor Dad is what came to mind
Yep.
when we were coming up with this. And
Yep, absolutely.
great book if you haven't read it, and you've been living under a rock if you haven't. But it's a great book, Rich Dad, Poor Dad, by I think that's Kiyosaki.
Robert
Yep.
Kiyosaki,
Mhm.
yep.
Mhm.
Yep.
So,
Right.
time for breaking news.
Listen, you want to break the news?
Yes, breaking news.
When was the last time your home was raided?
Last time I used bug spray.
Yeah, that's good.
So, the producer price index came out today for the month of July. That's basically what manufacturers pay for their goods before they're manufactured and then passed on to the consumer. It was slightly below what expectations were, but when you strip out food and energy, food is way up there.
Yeah.
Energy dropped, and we all know that. Gas prices, oil came down.
Not much. We're still above where we should be.
Yeah,
But
no, I get that.
Yeah.
But the point to this is that it's still in the 9%, almost, it was 9.8%. They were expecting 10 something.
Mhm.
So it's still high. They're still manufacturers still have to push their cost increases forward. So
Yep.
we're going to be in inflation territory for quite some time, and unfortunately,
If you want to call it inflation.
and the Fed
Don't call it recession. I mean, we're not. It is not a recession,
That's right.
folks.
Just
Go
a
vote this November.
Figure
We're not in a
your
recession.
imagination. That's right.
So, the Fed is going to
It's an
continue
illusion.
to raise rates until I heard the chairman of the Minneapolis Fed say that they're getting down to 2% no matter what. So they will continue to raise rates until they get the inflation rate down to 2%, which means they're going to continue to raise rates for a while.
Yeah.
Mhm.
I did want to touch on the general mortgage outlook, what's been going on. So I got this article from the Mortgage News Daily,
Mhm.
and this is based on refinancing. And he said last week it has picked up. Refinance index was up 3.5% from the previous week, its largest gain since June, but it was 82% less than last June at this time.
Just a little bit
Yeah.
different.
We had Brian on a couple of weeks ago,
Mhm, Brian Maddox.
and if you're in the mortgage industry and you weren't paying attention to your purchase money business, you're in a world of hurt right now. Excuse me.
I don't know. You're up 3.5%.
No, you're down 82%.
It's all in how you look at it. I was at the airport at 4 a.m. this morning. That's a whole nother story. But while I was sitting there, I was reading about Loan Depot, big
Yeah.
company. They had 11,500 employees. They've laid off almost half of them.
Wow. Well, I didn't hear about the half.
Yeah, and they expect 900 more
Yeah, I hear they're going
to be
down.
laid off. Yeah, so they're stopping their wholesaling,
Mhm.
which I thought was interesting.
Well, they're not going to have too many retail businesses that are going to be using them.
Yeah, that'll be selling them. Now, they're finishing out their pipeline. They're not leaving anybody hanging like it happened back in, 08, but
Mhm.
but they're making some big changes.
Now, purchase applications declined 1% week over week, but they're just down 19% from a year ago,
Mm-hmm.
which is still bad, but that's
Better
where,
than 82.
if you're in the mortgage business, that's where you're going to get your
Right.
your workflow from,
Mhm.
your cash flow. Now, I thought what was interesting was the size of the mortgages grew from, and these are refinances, 378,000 to last week it was 374. Oh no, 374.7 is they've gone up, $4,000 almost. Obviously, people are taking advantage of still having equity in their house, and in my opinion, if you're refinancing now, it's not rate and term. It's cash out refinances. People are hoarding a little bit of cash,
Yeah.
or they're spending a bunch of their money with credit cards to pay for food and shelter and gas
Yeah.
with their cards, and they need more cash.
Well, I mean, it could be rate and term. Probably not. I mean, you probably have some 5/1 and 7/1 arms that are coming due that are, people have to.
If you had a 5/1 or a
Could be.
7/1 arm in the last 3 or 4 years, you're a moron.
Crazy, yeah. Crazy.
Well, you wouldn't
Crazy
come
person.
due in the last 3 or 4
Yeah,
years.
that's
You
right.
would have
5 years ago.
Well,
5 to 7 years
Yeah.
ago.
my point
Come
is,
on,
why
Bill.
wouldn't you have refinanced before then?
Well, I
mean,
Unless you couldn't qualify.
Well, remember in 2018, mortgage rates were in the 5s.
Yeah,
I mean, that's 4
but
years
that's what
ago.
I mean.
Yeah.
As soon as they got down below 3,
Yeah.
why wouldn't you have been refinanced?
Well, I was saying
Yeah.
this, so you'd be refinancing from 2015 to 2018,
Yeah.
and
Yeah, I wouldn't.
your rates would be pretty comparable to where they are now,
Um,
or higher.
yeah,
Mhm.
but that just means they're going to an adjustable. And yeah, you might want to go to a higher fixed rate than be stuck with a higher adjustable and not knowing where it's going to go.
Mhm.
I get that, but I think again, unless you couldn't qualify, you should have already done that. So you're
For
still
sure.
a moron
All right.
or not paying attention.
Do you have a graph
Well,
that you wanted to show
no.
online, or that's
Not-
just for
not
us
yet.
to look at? Okay.
That's That's going into our next segment.
Oh, gotcha.
But thanks for reminding me. Purchase mortgages prices rose to 416,300 from 413. So we still have prices that are going up.
A little bit. And that's nationwide too. So
Mhm.
it's going to be different depending on where you are located.
Sure.
Sure.
So average interest rate for a conforming loan was, it was 5.47 compared to 5.43, which is not a big deal. Here's what really surprised me though. Jumbo 30-year fixed.
Uh-huh.
The rate was 5.9%. Since when is a jumbo more expensive than
5.09.
Yeah.
Yeah.
Okay.
Yeah, 5.09. Yeah.
What did I say? 5.9?
Yeah.
Okay. 5.09. So barely a tick above 5. So since when is jumbo rates lower than conventional rates?
Yeah. Amazing, huh?
Because most loans are jumbo now with, 416 being the average loan size.
That really shocked me.
Yeah, that is.
That's crazy.
And this article, and again, it was in Mortgage News Daily yesterday. You can get the whole thing, but they were showing these rates with, some points, a little bit of points, but the points were basically the same
Yeah.
for all of these. I'm just shocked that the jumbos.
And the key to all this is how is that really going to affect real estate investors when they're trying to fix and flip properties? How are the sales going to change if they're going to change? We still, through all of this, have a shortage of housing.
Yeah.
Mm-hmm.
We're still low on the housing. So, things are still going to be moving along.
Well, the one thing I want to add to this is that unless you're in California or certain areas of the country,
Bubble units.
you're not going to be getting, if you're an investor, you're not getting a jumbo loan.
Mm-hmm.
So if those houses are moving, it's going to be for more than likely people that are owner occupied.
Sure.
It's
Yeah.
smaller units that are going to have a lot of investors in. So as people are getting priced out of the market will come back to them eventually. Wages still aren't keeping up with inflation, but at some point wages will, as inflation starts to come down, and then prices on homes will, I don't want to say flatten, but they'll get more realistic.
Yeah. Yeah. Everything
we just
will
keep
adjust.
beating the same drum here that this appreciation rate is unsustainable.
And it's a great time to be a landlord.
Mm-hmm. Yeah. I mean,
It's a great
rents
time
have
to be a
never been
landlord.
higher.
That's right.
Rents have never
That's
been higher.
right.
All right, so we are going to talk about wealthy versus rich.
Wealthy versus rich.
So what I'd like to talk about is the difference between getting rich in the stock market
Mhm.
and getting wealthy in real estate.
Mm-hmm.
You have any thoughts on that?
Do I have thoughts? I have a lot of thoughts on that. I mean, I'll focus more on the real estate side since that's more of my wheelhouse. There are so many different ways to invest in real estate,
Mhm.
and so you can be diverse between asset classes, between geography. You can, have cash flow. You can have appreciation. We were just talking about unsustainable appreciation, but you can also have depreciation, which is a tax advantage. You can even hypothecate if you want. So, it's just pledging an asset without conveying title. So there's all kinds of ways. And the thing to remember, I think, for real estate is where the shiny object syndrome happens in the stock market.
Mhm.
My cousin put, 10,000 in on this stock and it blew up and now he's a millionaire. That, that's great. But the chances of that occurring are so minimal. Like it's so tiny. But in real estate, you don't get that quick fix that everyone it's a headline. Everyone just wants the headline. I made $400,000 when I sold this house. It was fantastic. Like, that's not typical. It's
not.
It's a long process.
Yes.
And it's a long game that you have to play,
Mm-hmm.
and you have to diversify yourself. But that long process is the wealth. That is where the wealth is generated in that process.
Mhm.
You can become a millionaire in the stock market overnight from some anomaly happening that you had no control over. It could have gone 1,000 different ways, but it went this way for you. Congratulations. Now, what do you do with it? I suggest take that money invested in real estate. But
Yeah. Yeah. Plus, I mean, you talked about assets and all of that, different classes, but not only that, but you can also choose to be active or passive in investing in real estate, whether you're funds, syndications, or are you investing in individual people that Are you buying notes? There's
are you
so many different things.
Buying and selling notes? Are you buying performing assets, non-performing assets, reperforming assets, commercial, residential, mixed use, raw land, whatever, what have you. I mean, there's so many different avenues.
Lots of options.
You can do seller financing. You can create a note and then sell that note, or sell a portion of that note, sell the first half of it and retain the second half. Like there's so many options. And again, I'm only speaking from the real estate side that I know, but I don't think you have that many.
Well,
you have options in stock market, but I don't think you have. It's not the control tied with an asset.
Right.
That's what we like.
If you're confused about all the different ways and how to do this, how many people that are invested in the stock market know all the different ways to invest in the stock market?
That's right.
Probably none of them.
Most of them just have money managers that they can say, okay, that sounds good to me. I read an article yesterday from JP Morgan Chase Advisors, and in the article it was stating that the average investor after inflation ends up with about a 2.9 to 3.1% return.
Wow.
Over the 20 years, because they always buy at the wrong time, they sell at the wrong time, they pay too high of fees, all that stuff, taxes, all that is involved, because they don't know. They trust other people to manage it for them, and if they try to do it themselves, they make even less money.
Yeah, they run scared.
So, Sharif, if you'll put up that graph that shows the home prices versus the stock market since 1900. So it's here's the appreciation, and let's talk about I couldn't find one that went beyond 2010 really that would show a long term in the market. So this is since the 1900 stock market versus home appreciation, basically. So the red line is the stock market, and as you can see, they run fairly parallel through from 1900 all the way to 2010. So the values are basically the same. Okay, the prices are basically
the only difference is you don't have steep losses and gains in the housing as you do in stock.
Housing is pretty steady until you get to
2008
where it went down, but it recovered fairly well, just like the stock market did in 2008. I mean, it dropped too.
Yep.
But here's a little difference in building wealth versus getting rich. Could you put that back up again if you don't mind? With the housing, those prices are the same, but the value is not in the price. The value is in the income that those properties pay you. Let's switch over to that graph where I have there we go. And I know it's kind of hard to read this. This is the 30-year and the 20-year history of the S&P 500. And these are the returns for 30 years. The average return was 9.84%. Yeah, 9.84%. And then adjusted for inflation, it was 7.15. Now this is in price, right? If you own real estate and you're getting rental income from real estate, do you think you're going to get somewhere in the 7 to 9% return on those investments?
I think most people that we work with get somewhere between 7 and 12% on their investment.
Okay, now that's on we'll call it the dividend part on the real estate.
Yeah.
You're not going to get a dividend like that in the stock market. Your typical dividend paying stocks, number one, are not going to follow that same trend line as far
Right.
as pricing goes.
Mhm.
And your dividend typically is going to be between, depending on the company, 2.5% to 4%
Mhm.
return.
Yeah.
Okay. With the housing market, we'll just say in single family. I'm not going to talk about anything else right now because the graph is based on single family housing.
Mhm.
You're getting a 7 to 9% increase over time every single year,
Mhm.
with a few exceptions, but over time.
Yeah.
You're getting that same appreciation as the stock market, but you don't get paid in the stock market till you sell.
Right.
Well, with real estate, you're getting 7 to 9% returns,
Mhm.
and then you get a big
Depreciation.
profit when you sell if you decide to sell.
Mhm.
Plus, you also get the tax advantages
Mhm. Yep.
with depreciation. Now, a lot of people are going to say, "Well, yeah, that's fine and dandy, but I don't want to be a landlord. That's a lot of trouble
That's
to go
what
through."
property management companies are for.
That's right. You don't have to do it yourself. You can invest in funds that do the same thing,
That's
that are
right.
backed by the same assets,
Yeah.
where you can get the same tax advantages that you can by owning real estate, because you essentially do own the real estate.
Mhm.
Because of being an equity partner in a fund, you are one of the owners,
Right.
and you get those same tax benefits.
And you say all of those things that are included into the real estate and building wealth, and we, sometimes get overlooked, but the amortizing loan, like you get to buy a property, or or refinance or whatever you do with it, and pay that loan in today's dollars for the next 30 years.
Mhm.
Like the value of that is immense.
Let's touch on leverage.
Mhm.
So you can do the same thing in the stock market. You can leverage, you can get loans to buy more stock than you have money to buy the stock with.
Yeah.
But what happens if the price of that stock goes down?
Oops.
What does your leverage have? What happens? You have to
probably get
sell.
called.
Yeah, you either have to sell or you have to put up more money,
Mhm.
because that leverage is based, just like on a house, a percentage of the value.
Mhm.
So if the value drops, you have to bring your percentage back up again by either adding cash or selling the asset.
Yeah.
In the housing market, it doesn't matter if the price of the house drops. They're not calling your loan or making you put up any more money.
No.
The only time you would have to put up more money is if you had to sell for some reason and you owed more than what the mortgage is for.
Mhm.
Or you couldn't sell it for what the mortgage is worth.
Yeah.
And again, and I'm going to continue to quote this until the day I die, because it's a great quote from David Phelps. The house doesn't care what it's worth.
That's right.
Mhm.
It's still producing an income.
Yeah.
And even in down times, recession periods, people still need a place to live. They still need to eat.
Yeah.
Mhm.
And in real estate, you're providing them with a place to live. Now, there is location is very important.
Mhm.
Sure.
If you're in certain states, the government may come in and say, "I'm sorry, these people can't afford it, and we're not going to let you evict them."
Yeah.
Yeah.
That's why we don't like to do business in those states.
So you have to be, due diligent about where you buy your real
Right.
estate.
Right.
Mhm.
Very
So
important.
that does happen.
But not in most places. That's not happening in most places.
Yeah, and most people want to pay their rent. You are going to get people that play the system, but in most cases, you're going to get people that want to pay.
Another thing that I think we should touch on too is, when we talk about building wealth, we were talking about all the advantages you get when you're in real estate versus being in the stock market. Well, when you're getting into real estate, be careful about what dollars you're taking money from. Are you investing with a IRA, 401k, or are you investing with cash? Knowing that if you're owning property, you don't really want to use your IRA to own the property, because then there's so many other advantages, tax advantages, that you're not going to get using your IRA.
Yeah. The depreciation.
Yeah. Versus using cash for that. So
or someone else's money.
yeah, so
Leverage.
So make sure you are investing from the right pool, buying the right things from the right pool. Does that make sense?
Yeah.
Absolutely.
There are rules you have to follow with self-directed retirement accounts, and we've always found that if you're investing your retirement account,
Be a lender
in a business that is not tax advantaged, then that's where you put your IRA money.
Mm-hmm.
Yeah.
If you're investing in something that is tax advantage, you're not getting that advantage because you're already using money that's tax deferred or tax exempt.
And it's not a bad investment.
No,
it's just not as wise.
You're not utilizing
all the benefits.
Yeah, all the benefits that
Yeah.
are entitled.
Yeah.
I had one other thing I wanted to talk about on this subject, but I'm old and I forgot.
While you're thinking about it, let me share the question of the week
Yes.
again. So
you type fast.
I know, right? We want to know, in your opinion, what is the difference between being rich and being wealthy? And then what do you do to achieve being wealthy? We assume that's what you want.
Yeah. So how can people answer this question? You can do it right online watching this.
Yeah, you can leave it in the comments and we'll pull it from the comments.
Whether we're live or recorded, it doesn't matter. We're still going to see it.
Yeah, we're going
right?
to pull it
I'm
in.
glad you didn't say dead.
Yeah, we're going to talk about it next week because we're interested to see what other people are doing.
Yeah.
What strategies you all are employing to build wealth or get rich. I don't know, whatever you want to do.
Excellent. So,
nothing wrong with both.
does anyone have a last word?
So,
Gotcha
your
again.
last word. I don't know. I like hypothecate.
Yeah. That was a good one.
Yeah.
That's it. Hypothecate.
Hypothecate. Do it if you can, because you do not have to convey title.
And then for next week.
So we're gonna close out here. It's been great. Hope it's been entertaining and hope you've learned something. Next week we're going to have Dean Rogers on with us, and we're going to be talking.
Former NFL football player turned apartment aficionado.
That's a good one. Yeah. So we're going to talk about building wealth versus getting rich. It's kind of a theme that we're going with here. And again, we'll have Dean Rogers with us. So guys, it's been great. If remember, we are Carolina Hard Money, Carolina Capital Management. Go to carolinahardmoney.com and you can click on the investor tab if you would like to invest into our fund, a passive investment that gets outsized returns. You can click on the borrower tab and fill out an application if you would like to borrow money for fix and flip, new construction,
short-term and long-term, right?
Yeah, multifamily, and we do long-term rental loans as well. Anything else to add, guys?
See you next week.